Hey traders, welcome back to CLiK Trading Education's weekly market roundup. I'm Ifti, and boy, what a week it's been. Week ending September 5th, 2025. Markets showed some serious divergence. Safe havens soared while risks got real. Weak jobs data shook things up, shifting Fed rate bets and creating trading opportunities. Whether you're a retail hustler or institutional pro, we've got the insights to keep you ahead. Let's dive in. First up, the big moves across asset classes. Equities were a mixed bag. Tech and small caps led the charge, but not everything was rosy. Check this out. The S&P 500 surged to make new highs before retreating. It ended a modest 0.17%. Nasdaq climbed 0.87% thanks to tech strength, but the Dow Jones dipped 0.49% as industrials lagged. Russell 2000 up 0.86%. Small caps showing resilience. And over in Europe, the FTSE 100 gained a modest 0.28%. Why? Soft August jobs data, only 22,000 added versus 75,000 expected, dipped futures initially, but then rebounded on rate cut hype. Now, commodities, safe havens ruled. Gold surged 3.85% to 3-month highs, silver up 3.27%, but crude oil slipped 3.25% on demand fears and shaky OPEC discipline, even with geopolitical tensions brewing. Crypto also showed divergence. Bitcoin rebounded 2.35% above $110,000 on risk appetite. XRP up 2.12%, but Ethereum down 1.97% amid fresh US and EU regulatory scrutiny. Ouch. Finally, Forex. The dollar softened as rate cuts loomed. Euro plus 0.22%, the pound plus 0.12%, Japanese yen plus 0.21%, the CAD plus 0.62%, tracking or slide, the Aussie plus 0.12%, and Swissy down 0.32%, Swiss franc flexing its safe haven muscles. This divergence screams market recalibration. Tech holds strong, but gold's move hints at hedging against slowdowns and inflation. Bond yields dropped, opening doors for rate-sensitive plays. What drove all this action? Here are the top 5 storylines that shaped the week, and they're interconnected. Number 1, the crash of the jobs report. Just 22,000 jobs added in August, way below expectations. Unemployment hit 4.3%, highest since 2021. Manufacturing and retail contracted. Wage growth cooled to 3.9% year over year. This triggered a Fed easing frenzy across assets. Number 2, tech picks up the pace. Apple, Alphabet, and Broadcom crushed earnings. Alphabet surged on an antitrust win, adding $70 billion in market cap overnight. Tech's resilience. It's a growth defensive hybrid, with cloud and AI segments shining despite headwinds. Number 3, safe haven surge. Geopolitical risks in East Europe and Asia pushed gold and silver higher. Treasuries saw inflows too, lowering yields. Mining stocks outperformed as margins expanded. Smart hedge against uncertainty. Number 4, oil moves reignited. OPEC versus oversupply. Fears tanked crude 3.25%, ignoring tensions. But energy equities held up thanks to refining margins and capital discipline. Number 5, crypto regulation clouds. Heightened scrutiny slammed Ethereum and alts more than Bitcoin. New proposals on staking and DeFi created divergence. Bitcoin's acting like digital gold now, decoupling in stress times. These threads wove a tapestry of caution. Jobs weakness amplified everything, boosting safe havens, while corporate earnings kept risks afloat. Growing economic concerns? Absolutely, but opportunities are hiding in the volatility. So what's our takeaway at CLiK? This was a week of rotation and caution. Market patterns. Investors flocked to safe havens like gold and small caps. Risk-sensitive sectors like tech and crypto diverged notably. Oil stumbled despite tensions, and the dollar softened against majors. Trading opportunities, yield curve shifts set up fixed income plays. Gold's technical breakout screams momentum. Sector rotation opens pair trades, and energy volatility is prime for swings. But don't forget risk management. Jobs weakness might signal broader slowdowns. Heightened volatility requires tight position sizing. Diversify amid correlation breakdowns, and watch crypto headline risks. Eyes on the Fed. September FOMC has a 93% chance of a 25 basis point cut, with 75 basis points by year end. Quote from Chief Strategist Marcus Thorpe: "The jobs report has fundamentally altered the market's perception of Federal Reserve policy. Traders who adapt quickly will find exceptional opportunities across multiple asset classes." Next week's critical data: US CPI Tuesday, PPI Wednesday, retail sales and consumer sentiment Friday. These could trigger big moves. Watch for overextensions and align with the easing cycle. Traders, that's your roundup. Adapt fast, manage risks, and seize those opportunities. If you found this valuable, hit like, subscribe, and drop your thoughts in the comments. What's your next trade? Follow CLiK for more education and insights. See you next week. Trade smart, trade CLiK. Thank you for watching.